Hey, everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, I'm sure many of you heard the Fed has cut the interest rates by 25 basis points. This was expected. The Fed futures and many market participants expected this. Now, we're not seeing any action in the markets, which kind of makes sense because, as I've been telling you guys, this is not some fundamental market thing. I think it's good from a psychological standpoint for retail, but for the markets to actually get going, this is not the catalyst per se. But what is, and as I've been sharing with you guys, global liquidity has broken that downtrend. It is hitting new all-time highs, and the markets are following, of course. So we got to just let the markets do their thing. I've been saying there could be one more flush out before we start rallying, but I'm expecting the second half of September, which, we're past the middle of the month, to be better. I think we start climbing after maybe a flush out, and then October we start hitting new highs. We got a lot of big narratives lined up like crypto legislation and much more. So stay patient, guys. Don't be emotional. Be educated. We're watching the different metrics and signals, and we're still in a bull market. But we got huge news, speaking of narratives. And here, Charles Hoskinson, founder of Cardano, said today, great meeting today, XRP Nation. The Ripple folks did really well, as did A16Z. Lot more work to do, but great progress is being made on bipartisan legislation being passed this year. What is he talking about? Well, there was a banking GOP roundtable that was held this morning. And in addition to Charles Hoskinson, folks from Ripple, A16Z, and Kraken and Coinbase, Multi-Coin Cap, Paradigm, and Circle were also in attendance. The meeting lasted about an hour and a half and focused on refining language in the market structure draft. So, of course, the market structure bill is named the Clarity Act, and that is being worked on in the Senate right now. It has to go through its different hurdles, of course, and we're hoping this thing can get passed late October, maybe into early November. This is what I'm hearing from people in DC. I'm actually going to be interviewing Congressman Tom Emmer tomorrow, so I'll try to get you guys the details directly from the sources here. But great to see the industry weighing in on these bills and pushing Congress to do the right thing here and making sure the language is correct. So this is very bullish news. And Charles giving a bit of a shout out here to the XRP army because he's had a lot of battles with them over the years. But great to see the industry coming together. Now, look at this news. The SEC makes spot crypto ETF listing process easier, approves Grayscale's large cap crypto fund. This is huge updates, folks. Let me give you the details here. So the US SEC on Wednesday approved a set of rules for exchanges to list exchange-traded products holding spot commodities, including cryptocurrencies, without requiring the agency's individual review time. The decision will enable exchanges to proceed with the listing of proposed ETFs by sidestepping the often lengthy 19B rule filing process that can take up to 240 days and requires the SEC to actively approve or disapprove an ETF. This is huge news. It's going to speed up the process and we can see more altcoin ETFs get approved. So essentially, the process will be more streamlined than before. ETF issuers will approach exchanges, NASDAQ, New York Stock Exchange, CBOE, with a product idea and desire to list their ETF. If the proposed strategy, token, or combination of tokens of the issuers meet the generic listing standard, then the exchange can proceed with the listing of the ETF. Again, very bullish for the future outlook of altcoin ETFs. SEC Chair Paul Atkins said the decision was aimed at reducing barriers to accessing digital asset products in regulated U.S. markets. Here's a quote: "By approving these generic listing standards, we are ensuring that our capital markets remain the best place in the world to engage in the cutting-edge innovation of digital assets." Alongside the rule change, the agency signed off on the Grayscale Large Cap Fund, which tracks the following assets: Bitcoin, Ethereum, XRP, Solana, and Cardano. Very bullish news, and it improves the prospects of the XRP and Solana news to be approved. So, folks, this is bullish. We are headed towards the XRP, Solana, and other altcoin ETF approvals. The SEC is making it easier. Folks, I will be interviewing Commissioner Hester Peirce next week. She's going to be in my studio in New York City. So we're going to spend some time going over news like this and what's the SEC's outlook and, next steps and much more. But guys, I mean, needless to say, this is so bullish. Now, more bullish news. Rex Osprey is going to launch the first US listed ETFs offering spot exposure to XRP and Dogecoin tomorrow. Now, many of you know we've been talking about this. They're doing it in a different way. They're using the 1940s Act where you can set it up as a C Corp. So it's not like a true spot ETF, not like the current Bitcoin or Ethereum ETF. This is a way for them to bypass the current long process to get these ETFs live. What we've seen though is Rex Osprey, I think they did it for Solana. They are trying to convert it to the 1933 setup for Solana. So I think this is a smart move on their part to get it on the market, be the first, right? And then try to convert it. But, I don't know how much demand they're going to get because they're not a huge brand. They're not BlackRock. They're not Fidelity. They're not Bitwise and so on and so forth. So let's see. But it's still a big win, right, folks? And in addition to these ETFs going live, specifically XRP, the CME is set to list options for XRP futures on October 13th. We've seen that the XRP futures listed on the CME have been breaking records, and one of the requirements the SEC has been looking for is having a futures market live, whether it be CME or Coinbase or whatever else, because they require this for Bitcoin and Ethereum. So both XRP and Solana futures will have options on the CME on October 13th. So this bodes well, once again, for the approval of the XRP and Solana spot ETFs, which I think will be the first out of the altcoin group to get approved. And one of the things I've been telling people is, look, a lot of folks are filing for altcoin ETFs, but there's not futures out there. So just make sure you set your expectations. The XRP and Solana tokens have futures markets, especially on the CME. So very bullish news for XRP and Solana, and things are heating up here. I love what I'm seeing, folks. I love what I'm seeing. Now, a little bit more details or context to the Dogecoin and XRP ETFs that are going live tomorrow from Bloomberg Intelligence analyst James Seifert. He wrote on X that the funds aren't pure spot products. Instead, they're structured to hold XRP and Doge directly, while also investing in other spot ETFs from outside the US to achieve exposure. Their filings also include language that would allow the use of derivatives for exposure if needed, though Seifert emphasized that this is not the primary approach. So once again, this is under the 1940s Act versus the 1933, which the majority of filers are looking to get. So very bullish news here for XRP, Solana, Dogecoin. Look, I'm not a Dogecoin holder, but certainly this is going to help with the narrative and the demand from retail and much more. So we're still in this bull market. We still got ways to go. We haven't hit the parabolic euphoric phase yet, but all of these things are going to lead us to that. Folks, quick word from our sponsor, and that is Uphold. Uphold is a great platform where you can buy Bitcoin, XRP, Dogecoin, Solana, and over 300 plus crypto assets. I've been a user of Uphold since 2018. They're one of my go-to exchanges. Never had any issues with them. Never had any problems. And folks, they also offer staking on 20 plus crypto assets. So they've added staking again, just like many other platforms. They are also 100% reserve. They don't commingle or lend out your crypto assets. You can review their transparency report on their website. They also have a great rewards program where you can earn up to 5.25% on stablecoins. And this reward program also gives you 24-hour early access to new tokens that they list. The stablecoins they support includes Ripple's RLUSD, where you can earn up to 5% there, and USBC, where you can earn up to 5.25% there. And to participate, you simply have to open the app once per month, deposit $50 once per month, and trade $50 once per month. Very simple, very easy, and it can fit right into your dollar cost averaging strategy. So folks, check out Uphold. Once again, great platform, and all the links will be in the description. Now, this is interesting. Circle has expanded USDC to the XDC network. So I know some of my viewers and listeners, you guys hold XDC in your portfolio. I personally don't. Not that I'm against XDC. It's just I can't. It's not possible to hold every token, right? And you don't want to spread yourself too thin. But XDC network is a layer one blockchain, which has been around since 2019. It's EVM compatible. So great to see USDC expanding to other blockchains, and XDC is getting that stablecoin volume. So this is really great. Moving ahead, we are getting some pushback on the Genius Act from the banking lobby. So the banks, one of the things we've talked about over the years is that they lobbied Elizabeth Warren and Gary Gensler to attack this industry. That's why that old grandma was so crazy about crypto, right? The country has so many other issues and problems, but she's forming the anti-crypto army. Gary Gensler going crazy, breaking the law and much more. They were being lobbied by the big banks, Jamie Dimon and all these guys. Well, the Genius Act has been passed, obviously, and these banks are trying to push back, like trying to say, oh, we need to revisit the language in there. The reason why they're doing this, disruptions at their doorstep. So blockchain CEO Summer Mersinger, she actually wrote an op-ed in CoinDesk today, and she said the Genius Act is already law. Banks shouldn't try to rewrite it now. So one of the things they blocked was, you being able to get yield, 4% and so forth. And the reason being is because you can just move your money out of checking, put it into stable coins and earn more than the BS interest that they're giving you in your checking or savings, right? So this is the disruption that's happening. It's clear as day, and they're trying to fight. But look, the crypto industry, the bill is already law, and the crypto industry is going to fight back. And we see this could be a delay tactic as well, because you see all the banks are launching crypto trading, their own stable coins. They're trying to get things up and running. The problem is they don't have the Clarity Act, right, to get a lot of these things into their system. So they're waiting for the legislation. But at the meantime, because there's a much more friendlier environment in the United States around crypto, more adoption of crypto is happening. So a lot of these guys are like, oh my gosh, we got to slow this down, right? Because a lot of firms are tokenizing money market funds where you can earn yield. So why the hell would you keep your money in a savings and checking account? Now, don't get me wrong, you need money in your bank account to pay your bills and so forth. But my point is the people are going to take more of their money out of those bank accounts and put it into Web3, DeFi, and stable coins and much more. So that's why these banks are now coming back to the table like, oh, we need to revisit it. We need to do this. Yeah, get out of here, right? Disruption is happening. So I love this article by Summer. You guys can certainly check it out on CoinDesk. Now, look at this. Bullish paves the way for U.S. launch with New York BitLicense. If you guys recall, Bullish, the institutional crypto trading platform, they just went public. They did an IPO about a month ago or a couple of weeks ago. Well, they've got the coveted BitLicense, which is so hard to get for many firms in New York. So many of you often ask, hey, why can't I access this particular exchange or platform in New York? It's because the BitLicense, which is really dumb. So hopefully they remove it. So Bullish, the digital asset platform and infrastructure provider that debuted on the New York Stock Exchange last month, has secured regulatory approval to expand its operation in the United States, a key milestone as exchanges seek a clearer footing in one of crypto's most scrutinized markets. Bullish announced Wednesday that its U.S. arm, Bullish U.S. Operations LLC, has been granted both a BitLicense and a money transmission license by the New York State Department of Financial Services. The approvals allow the company to offer institutional clients cryptocurrency spot trading and custody services in New York. The on-ramps being built around the globe, but obviously here in the United States, and New York is a big one because of that dumb BitLicense, but great to see Bullish got this, and that's certainly a big win for them. Moving ahead, P2P.org becomes a validator on $4 trillion Canton Network. Now, Canton Network, you may recognize that name because I just interviewed the CEO of Digital Asset, the firm Digital Asset, which works on the Canton Network. That interview was published 7 days ago. And I told you guys, Canton Network, keep an eye on this project, and I may want to invest in the token once it goes live because it's being backed by big banks like Goldman Sachs and even Citadel and much more. And it's built for institutions because it has privacy built in natively. So this is great adoption news for them. Having P2P.org become a validator on the Canton Network is a big win for them. And launched in May 2023, Canton is a blockchain platform developed to support regulated institutions with emphasis on real-world asset tokenization, interoperability, and adherence to compliance standard. The move adds P2P.org, a staking infrastructure provider that reports managing over $10 billion in assets across more than 40 blockchain networks, to a growing list of participants in Canton's ecosystem. Listen to this, including Goldman Sachs, JP Morgan, Citi, Santander, Bank of America, HSBC, and BNP Paribas. Recognize those names, folks? Keep an eye on this project. And like I said, I will tell you if I'm going to grab the token when this thing goes live, but this is one to watch because it's a public blockchain with privacy built in. And look at the banks and the people participating, right? So it's not, I don't think this is on the radar of many crypto investors and people in the industry. That I don't think they're paying attention, but I'm sharing it with you. Now, obviously, do your own research. This is not financial advice. I'm just giving you the facts. I'm pointing you in the direction of the facts and who's adopting the big names and much more. So again, do your own research. Now, Ford Industries eyes up to $4 billion share sale to back Solana push. So we got another publicly listed company that is launching a digital asset treasury strategy. So NASDAQ listed company Ford Industries filed for an at-the-market equity offering program. Wow, that's a mouthful. Of up to $4 billion, giving the company flexibility to sell shares over time to support its Solana-focused treasury strategy. On Wednesday, Forward Industries announced that the program will allow it to issue and sell common stock through sales agent Cantor Fitzgerald. The offering is being made under an automatic shelf registration statement filed with the US SEC. An automatic shelf registration allows certain large publicly traded companies to quickly raise capital with flexibility. So we're seeing companies getting creative here, and folks, these digital asset treasury companies are, I mean, it's bullish what they're doing. They're buying the assets that you hold. That's going to create a lot of supply shock and scarcity for many of these tokens, and they're buying billions of it. So this is where you want to pay attention. Who's buying? What are they buying? And you want to make sure you're holding those assets. So I hold Solana in my portfolio. I hold XRP, Bitcoin, Ethereum. I'm diversified, and my portfolio is doing really well as a result of those assets. So we continue to see really, really big stuff here. Here's another example, Metaplanet, which is Japan's version of MicroStrategy or strategy. They're expanding their Bitcoin treasury strategy with new US Japan units. So this is interesting. Metaplanet, the Japanese hospitality and real estate group turned Bitcoin treasury company, is ramping up its crypto strategy with the launch of two new subsidiaries, one in the US and one in Japan. In a Wednesday post on X, the Tokyo-based firm announced the establishment of Metaplanet Income Corp, a wholly owned U.S. subsidiary based in Miami with an initial capital of $15 million, according to its disclosure. The unit will focus on Bitcoin income generation and derivatives trading, creating a structural separation between Metaplanet's core Bitcoin holdings and revenue-generating operations. So again, these folks are getting creative. They're expanding. They're doing a lot of capital raises, buying these assets. So very bullish. But I do want to issue a word of caution that you've probably heard me say before. A bubble is forming here. So this is why you want to make sure you have a plan that we are going to exit this market before we hit the bear market. And some of these companies, not all, some are not going to do well. Just going to be some blowups, and it happens in every bear cycle, right? So I don't want to be holding any assets on the way down when this is happening. So just again, I'm not hoping for this. I'm not wishing for this to happen. I just see the writing on the wall. And I think many of you will as well. When leverage is being used like this at a high rate by many different companies, and everybody's trying to race to get their stock arbitrage, their price up from holding the asset, something's not going to go right. And not every company's, ran the same way, at the same standard, same CEO making the right decisions, things like that. So again, make sure you put your thinking cap on here. And if you are buying the stock of some of these companies, know what you're doing, right? Because it's going to get tough in the bear market. Some, like I said, will do well, especially those that have like proof of stake assets like Ethereum or Solana on their balance sheet because they can keep earning the rewards through the bear market. But I'm a bit concerned about the Bitcoin companies because there's no natural yield baked in there. So anyway, I digress. Just keep an eye out on this. But folks, show's not over. Bull market's still on. Be patient. Things are moving in the right direction. We are seeing mass adoption and building like never before. And of course, Congress getting ready to get the market structure bill passed into law. So it's going to be an exciting Q4, in my opinion. That's the news, folks. Let me know what you think. Leave your thoughts and comments below. A great way you can support me is by subscribing to my free email newsletter. It's 100% free. Check out my book on Amazon. It's available in paperback and digital, and my course at mycryptocourse.com. Folks, I appreciate you all. Thank you so much for tuning in, and I'll talk to you all later.